Done. Good afternoon and thank you. I'm Vaishnavi Vaiti on behalf of Acmel Strategic Advisors. I welcome you all to the H1 FY26 earnings conference call of Tyre Manufacturers Limited. Today we are joined by Mr. Chandrasekharan Tirupati Venkatachalam, Chairman and Managing Director, Mr. Varadarajan Krishnaraman, Chief Executive Officer, and Mr. H. Narayana Rao, Company Secretary. I welcome you all. Good afternoon, sir.
Good afternoon. Good afternoon.
With this, now I would like to hand over the call to Mr. Chandrasekharan to share insights on the company's performance, key operational highlights, and strategic outlook. Over to you, sir. Thank you.
Very good afternoon to one and all. I thank you all for joining us for this meet. It's been some time since we have had a meet with prospective investors and existing investors. I'm happy to have you all with us today. I'll quickly give you a background about Emerald Tyres. Emerald Tyres has been in the business of manufacturing industrial tires. We came with an IPO last year in December. Basically, we were involved. We looked at an expansion of the existing facility. We took money from the market to set up a world-class mixing plant. This is in addition to the existing mixing plant which we had. And other than that, we have increased our capacities in the solid tire plant for manufacturing solid tires. We have also had some balancing equipments in the pneumatic plant, some automatic tire building machines which will improve the productivity and the quality of the tires. So this is what we have done with what has happened with the money which has been raised from the IPO. Almost everything is ready. The solid tire plant has already started producing tires using the machines. The mixing plant is on the final verge of. We have had a soft start to the mixing facility, but we are on the final verge of putting interlocks to the system so that the whole process works automatically. This is what has happened in the last few months. Other than that, if you want me to talk about what the company is about, I will talk about it. Otherwise, I'll hand it over to Mr. Krishnaram. Mr. Krishnaram, you can start the discussions, and then subsequently, if there are questions, we will take the questions on.
Thank you, CMD. I think thanks for giving a brief introduction about the operations and the present status of the expansion of the project. I would like to glad to inform that the money that was raised has been put to deployment, and the production has already started both on the mixing unit as well as on the solid tire unit. The last 6 months, the results have been quite gratifying in the sense on a consolidated basis. We were able to clock from 98.53 crores to 105.21 crores in terms of top line. In terms of profitability, I think the net profit increased to 7.56% as against 6.38% the same period last year. And the EBITDA margins also have jumped from 16.51 to 17.75 in the 6 months. And I think overall, we're glad to inform you that in spite of the difficult market situation in US and other markets, I think Emerald is one company which has registered an increase in the US business. This is purely because we have been able to provide products as solutions rather than mere tires. So the customers have also invested in the molds and other facilities, and all products were jointly developed. So in the first 6 months, the US market business has slightly grown over the last year. And Europe has shown significant increase in performance. I think there are 2-3 other markets which are in the cusp of major improvement in volume, which are Australia, Latin America, and Saudi Arabia, and Southern Africa. All these 3 markets we have taken as a strategy to focus because of the US situation. And while there is no reprieve on the US situation, As far as Emerald is concerned, almost all the customers have reposed faith on us. Some customers asked for a price reduction. We had done some very marginal decrease where the profitability was much better. And wherever we were not, we had sufficient margin to justify the investment, we have resisted any increase, and they have also accepted. Basic reason is that, number one, because the product's quality stability. Number two, the consistency of delivery and the market appreciation of the product. All these three things have ordered well for the company. While we find competitors really apprehensive of the US market and falling revenues and falling top line, Emerald is one company which has not witnessed any such negativity in the market. And again, I think we have tried to increase our focus in other markets. So even if there is a backlash from the US market, we were well prepared, or we are well prepared to handle even that changes. So I think as against we were originally supposed to complete the project by October end, it has taken one more month because of various reasons. Number one, due to the power being sanctioned by the electricity department, there were so many things to be handled. And again, the rains were disrupting us almost for 15-20 days, where we couldn't complete certain areas. But already, as expressed by our MD, the soft start has started. And by this weekend, we will be completely going ahead with the mixing unit, which will ensure that we don't mix outside, and the entire requirement of the company will be mixed inside, which will bring substantial savings in terms of cost, as well as in terms of quality, improvement in quality, which is becoming very critical. And again, on the solid tire side, we have introduced the super premium version, which is called Aximo, Axis and Motion. And this product has already proved to be a game changer in the market. In the market like Middle East and other areas, the trials have given exceptionally good performance. And the market is eagerly awaiting the supply of these tires. In our recent visit to Europe, almost all the customers have welcomed this product. So we expect a good spurt in volume for the next 3 to 3.5 months as far as the performance is concerned. So overall, the outlook of the market is, fortunately for Emerald, has not been very grim. And Emerald internally is taking a lot of efforts to keep trend going on. And in fact, the proof of the pudding is that there is an overall increase in EBITDA levels and profitability at the consolidated level. And this trend will continue for the rest of the year also. So I think with this, we would like to leave the forum for any questions on the financials and the market outlook on any of these things. And we are here to respond to you. Thank you very much.
Thank you so much, sir. Investors, the floor is open for Q&A session. You can raise your hand, drop your questions in the chat box. Thank you. So first question is from Mr. Madhur Rathi. Mr. Madhur, you can unmute your mic and ask the question.
Sir, so I'm trying to understand that you have mentioned that this year FY26 we should be expecting somewhere around 25 to 30% top line growth. So which comes to around roughly 250 to 260 crore, and our peak capacity post capex is around 350 crore, which we hope to reach by FY28. So firstly, if you can confirm whether we are on track to achieve this guidance for this year as well as peak revenue by FY28. And secondly, how much of the total capex out of the 65 crore has already been incurred, and how much is left to be incurred, and what will be the total net debt on the balance sheet post this capex is completed?
Okay, so just to give you a small heads up on this matter. As far as the turnover is concerned, last year our consolidated turnover was 200 crores, and current year we are well on course to achieve 250 crores. As been mentioned, a standalone performance of 228 crores and a consolidated performance of 250 crores. So we are well on course. Again, as far as the project implementation is concerned, as I told you, the result of this expansion will accrue to the company for 3 months. And the next full financial year, we'll have the full advantage of the the expansion capacity. And we are well on course to achieve 350 crores, as you have mentioned, as we have also informed you. So there are no two different thoughts about it. As far as the project implementation is concerned, we would like to tell you that just before this meeting, we gave a small introduction on which we said the solid tire installation is almost over and production has started. There will always be a little bit of changes and things happening. Some of the molds are almost 80% molds have come, another 20% molds are under testing. And as far as the mixing unit is concerned, the basic final mixing has fast started. Now the master mixing, it's a sequential equipment where you need to start from one by one because it's a completely automated plant. The dry run and the wet runs are going on. So probably, I think in about 15-20 days, it will be fully running. So overall, this is the status. And as far as the completion of the project is concerned, there will always be some amounts which are paid only on performance. For example, if you take the press, we have always retained 10 to 15% till the press totally gets commissioned and the production becomes 100% perfect. Similarly, even in the mixing unit, majority of the equipments, they are all very costly equipment. So always 15-20% retention will be there. Once it completely runs, there is a period of 1 month which we will go through all the process. Then only we will release. Otherwise, in terms of completion of the project, except for one tire building machine, which is expected to come by month end, almost all the projects are nearing completion and the substantial amounts have been released. Balance are retained for the completion of the project. Okay. So with this completion of this, the company's overall debt is likely to go to 110 crores will be the total debt that the company will have. And I think the most important thing is in this whole project, the capital expenditure withdrawal from the bank, there is some amount, but I'm telling you, even after completion, it will be about 110 crores.
Sir, and what about the working capital to reach 300 crore, 350 crore of peak capacity? How much more working capital loans will we have to take over and above this 110 crore net debt?
I guess Krishnaraman sir's screen has been freezed. Chandrasekharan sir, are you able to hear him?
Are you able to hear me? Hello?
No, sir. Yeah, now I can
Hello.
hear you.
Yeah, there's some problem with the net connection here because it's raining. So, just give me a moment.
Yes, yes, sir.
Yeah. So I think can that question be put up once again? I'm sorry, we missed it a bit.
So, Mr. Chandrasekharan, the question was that beyond this 110 crore of net debt, which we require to complete our capex, how much further working capital loans will we require to reach our peak utilization of 350 crores?
That will be only a marginal increase in the working capital. We are self-sufficient as far as the working capital is concerned. And I don't think, though we have approached State Bank of India for another packing credit loan that is on use. As much as we use, we will be using we'll be having the packing credit loan. Other than that, I don't think we may need a huge working capital. There'll be a huge working capital requirement.
And also, what is our cost of debt, our interest rate?
See, excuse me.
Yeah, Mr. Krishna.
Sorry, I think there was some issue in the phone. So overall, the rate of interest is, as far as the EPC is concerned, export packing credit standard, it's about 6.35%. On the term loans, it's about 9%. and working capital varies somewhere, as I told you, the export packing credit is 6%, whereas the others are around 9 to 10%.
Right. Sir, now, since our 25 to 40% of our revenue is coming from US, and you mentioned that we have taken some marginal hit, and it doesn't seem that any trade deal is happening in a hurry. So, assuming that this 50% tariff remains, so then what do you, in the worst case scenario, that is, so what feedback are you getting from your customers? I mean, for the alternate geographies, what is where your competitors are based? What is the net differential in the import duty that we are having to face being based out of India?
See,
I
I
think first and
quickly tell
foremost,
you,
the
as far as
today,
the tires are concerned, it's a safety. Sir, can I reply? As far as in the
yeah,
short
please.
term, in the near short term period, tires are a safety product. You cannot, even if US wanted to, develop a parallel, a secondary source, it is going to take a lot of time, money, and effort to come up with this, which is not going to happen. Even for us, in the last so many years, with every customer, the time taken to get an approval is 1.5 years. It doesn't happen overnight. So for them to change the supply chain is going to take them as much time. They are not going to switch over tomorrow morning because there is a 50% tariff coming in. So that way, none of our customers are pulled out of us. No one has, initially the first 1 week when this announcement was made, they said that let us wait and watch because they didn't want to start paying the tariffs tomorrow morning. But then when they realized that it is going to remain for some time, they said don't stop the production, you go ahead and keep producing. We will see how much can be passed on to the customer. So it is our customer who has taken the hit and not us. So wherever little bit we are fairly comfortable and the customer said can you work on it, we have given them a certain bit of a discount, and that's it. They have, none of them have reduced any supplies, any orders to us. So that is as far as that is concerned. As far as backup plan is concerned, the next 1.5 years, even if they want to change the supply chain, we are working on different markets. It is not that we are only confined to one market. Europe, in this year itself, Europe has started increasing the demand. We are not present everywhere. You see, we are a small company, we are a growing company. So for us to approach the European market itself is large enough to cater to absorb the entire manufacturing which we are doing. It's just not enough that we manufacture. The capacity, the needs are much higher, and we are just on the tip of the iceberg. So Europe is one market. We are trying to get into the Australian market. There we have supplied our new Aximo tires. We have supplied an improved version of the existing tires. So there also the customers are started placing orders. The orders have started flowing in, trickling in. So these are the areas. South Africa is another market. Latin America is a market where we are working. So these are areas where we have taken efforts, and it is not that we have, like I told you, it is not an effort which I have taken only after this tariff has come. We have been working on this market for the last 1.5 years. We are expecting it to close in the near future, and that is why we are fairly confident that the tariff situation should not dent our prospects in the long run.
Sir, so last question from my side. Sir, so now our mixing plant should increase our margins, whereas the tariff hit that we have taken, especially in the US market, should have the reverse impact. Sir, so net, at least for the second half of this financial year, what should shareholders expect? The 17% operating margin that we did in the first half, can we sustain that, or we should expect a lower margin?
No, I think we can expect the same margin. I think when you talk about reduction in margin on the export front in US customers, it was very marginal. As far as the mixing, the cost savings that comes out of the mixing unit will accrue only for 3 months, because almost 9 months have gone by. So there won't be any major impact in the profitability that you would expect. We will continue the same trend.
Sir, actually, our operating margins are 13-14% if we remove the other income. So, I mean, are we?
See, other income, what does other income consist of? It consists of exchange fluctuations. Exchange fluctuation, whenever you do a casting, you do it based on the exchange rate only. So it is another form of compensation for the price realization. It is not as if it has come from somewhere outside. There are only two things. Other income is majority due to export benefits. Export benefits are always priced into the cost of the product. Again, dollar fluctuations are again priced into the product. So it is not as if it is other income. It is part of the sales revenue which contributes to the bottom line. 83% export-oriented company will need to derive its margins from all the aspects. Accordingly, customers also know what are the benefits that this company, if you ask an US customer, he has a precise understanding of what are all the benefits that will accrue to a company like us. That's how they start working at margins. So it is not other income. It is actually bottom line that should come for the sales that we do.
Sir, so with the rupee hitting 90 rupees to dollar and government also announcing some export package, sir, are you including that in your 70% margin guidance, or that is over and above?
Sir, in fact, I do not, till today, we have not come across any benefits the government has given. In fact, even yesterday I looked into the RBI, notification. There is nothing significant as far as export companies are concerned. While there are a lot of talk being spoken about, banks are mulling over. Maybe they will give some additional loan to overcome the strain on cash flow, but we are not. That is only going to increase the cost. We are not interested in that. If there is whatever shops are required are all already provided, we are working on that. If anything comes, naturally that will add to the bottom line. Till today, we have not come across any additional benefit that has come from the government.
Thank you, sir.
Thanks a lot.
Investors, I request you to raise your hands or drop your questions in the chat box. Thank you.
Sir, so meanwhile, sir, so are we exporting to Russia?
Yes, sir, we do. We do. We do.
And sir, is the Emerald brand owned by the company?
Yes, sir. Everything. Emerald is the name of the company. Brand name is Gregster, Empower, Aximo, and all these, all Gregster Gold. These are the brands. In Russia, we sell Gregster Gold as the major brand in the market.
Sir, so are we looking at, sir, retreading of aircraft tires, for example? Because I understand we make tires for aircraft also.
No, sir. We don't make for aircraft. We make for ground support. For the logistics in the airports, we make tires. And the retreading of aircrafts is not something that is within our domain. It's a high-end tire which big majors like Michelin and others do. So we are basically into ground support. For example, the tow tractors, the aero bridges, then the pushback tractor trailers, and the GPUs. All the tires other than the tire on which the aircraft lands are all our domain, sir.
So the rim also we are making, the iron rim. So,
yes,
100% of the tire sales that we are doing is inclusive of rims also?
No, not 100%. Whenever it goes to the OEM, it will have a tire and wheel as an assembly. Very rarely you come across a prospect for supplying rims in the replacement market. So the life of a forklift is expected to be between 7 to 8 years. In 7 to 8 years, if you even consider a change of tires every year, you're looking at 7 or 8 sets of tires being replaced, during which these are all mild steel rims, not less than 4 mil thickness. The damages to such forklifts. See, forklift is a counterbalance equipment. So what is the weight on the back side is what is going to be on the front side. So you cannot overload an equipment and run it. It will tip to the front. If you overload, instead of 2 tons, if you're going to lift 3 tons, it is going to tip. So So, misuse in terms of overloading is not an issue for us. Misuse in terms of the work environment, the atmosphere where it is working in a steel mill, probably near a furnace. These are the areas where our tires will have an impact. So as such, wheels are not something which we supply much into the replacement market. It is more for the OEMs.
So is there capacity fungible between the different types of tires we make?
Can you come back once again?
So is there
No
capacity fungible between the pneumatic tires and the other kind of tires?
No. Pneumatic tires has a different manufacturing process. Solid tires have a different manufacturing process. So you can't, in a pneumatic presses, so the mixing remains the same. But when it comes to downstream, building of tires, curing of tires, these are two different methods by which we do. So a pneumatic tire plant cannot manufacture solid tires.
Great, sir. Thank you very much. I'll join the queue.
Thank you.
Thank you. Next question is from Mr. Kailash Joshi. Mr. Kailash, you can go ahead and ask the question.
Good afternoon. I'm Kailash Joshi, individual investor here, speaking from Chennai. I'd just like to thank you for the opportunity to attend this conference. I have heard your presentation as well as gone through the presentation. It's a good set of numbers that you have posted for this first half of this current financial year, in spite of increase in the manpower cost as well as in the interest cost. The EBITDA margin has not only been maintained, and it has been increased also. Great set of numbers. I have got a few queries. If you please permit me to say so.
Yes, sir.
Sir, with reference to the capital work in progress, as per the financial year ended 2025 March end, it was 3,040 lakhs. In the current financial year's first half results, as I go through the current assets, there has been a capital work in progress of 5,009 lakhs. I just my query was whether the expansion program of the rubber mixing plant as well as the solid tire and pneumatic tire plants, are they as per time schedule? Is there any cost overrun? That is my question.
No, sir. There's no cost overrun as such. But in terms of implementation, we were expecting the entire process to go on steam by end of October. There was some delay in getting power connections from the government of Tamil Nadu, and also like we told you, we are in the final stages of implementing the mixing plant. As far as the solid tire plant is concerned, the presses have been installed. All the molds which we were supposed to receive have been received. We are doing the final checks on some of the molds. About 80% of the molds have been released. Some of the molds, final checks are going on to look at the dimensions, to look at we have to look at the inscriptions on the tire also, so that there's no mistake in the whole process. So all these things are going on, but overall we would have the mixing plant. There will be by this month end we should have everything in place. So the last quarter we will have full production capacity available. So what was going out for mixing, a fair bit of process has been brought in house. So that's where we're talking about a reduction in cost and some accrual of profit because of the logistics and also improvement and quality of the product.
Thank you, sir. So I understand from your answer that things are in place and they are as per
Absolutely.
schedule, and there has not been any cost overrun also.
No.
Thank you. I got next query from you. That is it possible for you to give the revenue split? That is the revenue that is coming from India as well as revenue that are originating other than India. Is it possible for you to tell me?
Yeah, 83% of the revenue has come from exports, sir.
Okay. Can you just give a split up in terms of the OEs and as well as the replacement in India as well as elsewhere?
I think as far as the domestic market is concerned, is it okay? Is it audible?
Yeah, it's audible.
Okay, so as far as
Narayanan, can you put yourself on mute? Yes, sir, Krishnan, sir, go ahead.
So as far as the domestic market is concerned, the majority of the revenue you can split between both domestic and export. It is 50-50 in the domestic market. As far as the export is concerned, it is 20% OEM and 80% replacement market. Where in the global market, we support medium-sized and small-sized OEMs. We don't take on the big OEMs like Toyota outside the country. Within India, we are major suppliers to Toyota, Kion, JCB, Yace, Godrej, and Doosan, and all those companies, because we can handle the logistics being within India. When you take globally, I think you need to stock at multiple locations and supply, which at this point of time, we are not prepared to take on such a huge impact. So we are taking small OEMs and medium-sized OEMs, and that accounts for 20% of the global revenue.
So it's, as per my understanding, great to have a replacement market which is of relatively
yes, sir, better margins.
Orders, and in that event, you need to have a higher number of inventory also. One
That's
needs
right,
to
sir.
forecast also.
That's right, sir.
Your marketing team is doing a great job, and I mean, there should be really agile.
Thank you, sir. Thanks a lot.
That way, good job. Third one is, sir, with reference to the solid tires and the pneumatic tires. Is my understanding correct in stating that the solid tire per ton realization is more compared to the pneumatic tires? Please correct me. And which sector should be giving more margins?
I think you're 100% right. Solid tires gives better margin, purely because in solid tires, the majority of the applications are application oriented. For example, a solid tire can be used in a scrapyard. It can be used in a foundry. It can be used in a 24-hour application. It can be used in sub-zero conditions. It can be used in higher temperature conditions. All those areas makes the solid tire more like an engineering piece. It's an application oriented product. Whereas in pneumatic, generally, I think they are used in places where a solid tire doesn't work, or probably pneumatic is ideal for such application. For example, you take agri implements. They are going to go in mud and other areas. There you cannot use a solid tire because it will get stuck inside the mud. So the pneumatic has a very different application and solid tire has a different application. But as an organization, we are trying to optimize the margins on both sides, because we don't just supply, even in pneumatic, the run-of-the-mill tires. We supply winter tires to Europe for the forklift application, which very few companies do it. We also supply high-end applications like the mobile homes. The recreational homes, they move from one place to another. We make tires for that. We also give tires to implements which are used 24/7 in very tough advanced markets. But as a policy, as a product, if you see, solid tire always has an edge over the pneumatic tires in terms of profitability. Also, in terms of competition and technology edge, we are far ahead in solid tires, and that also accounts for a certain premium on the solid tire product. Again, in solid tire, you can have the standard, premium, and super premium. If you sell more super premium, your margins will be higher. Whereas in pneumatics, there is always a standard quality, maybe a premium quality in some applications. So that way, I think solid tire will certainly provide better margin, but also the product has a lot of technicalities. There are a lot of research that has to go into making a tire better. In fact, on an average, we spend about 2.5, 3 crores on R&D every year in order to find new challenging formulations for certain tough applications. And that is where your margin keeps improving. If you do the run-of-the-mill tires, solid tires will also be in the same level as pneumatic. Because Emerald is working on the high end and constantly innovating on products, we are able to derive better margin on solid tires.
See, from a customer's perspective, what happens is he needs a basket of products. There are certain areas. If you are a forklift service provider, he may have certain customers who will want solid tires. He may have certain customers, depending on the application, who would want pneumatic tires. So if you want, you got to serve both these customers, of what they need. So that is why we are in solids and also in pneumatics. And pneumatics gives us the company a scope to expand future products. Today we are doing industrial tires. Tomorrow we could do mining tires, construction equipments. We could go to agricultural implements. There are a lot of areas where you can grow. Solids are predominantly industrial applications. So it gives us the flexibility to keep moving forward to provide more products to the customers.
So, sir, now I understand the reason for expanding the pneumatic tires from 12 tons per day to 30 tons per day, as
Yes.
given in the prospectus. And I was wondering as to why solid tires are only just maybe approximately doubled as per the prospectus. Because as a shareholder with a very limited understanding, just wondering as to why, when solid tires are going to be giving a better margin, or why the company is more or less tripling its pneumatic tires. Now the statement now to an extent brings clarity to my thought process.
You are right. You are right.
So finally, if I may ask you, just to cater to this increase in solid and as well as pneumatic tire in terms of volumes, with reference to the raw material as well as with reference to the finished goods movement to the destinations wherever it is. I mean, you have got two subsidiaries. One is in Dubai as well as another is in Belgium. Do you foresee any, difficulties or challenges with reference to this movement of these finished goods, or are you working on anything else that is? If my understanding is correct, the tires are moved only by the containers. By the sea route. But to an extent, the geopolitical tensions may be taking a longer route. Do you foresee any trouble, or you are confident of handling the situation like that?
So, in between, when there was the Houthis problem was happening in Saudi Arabia, and when Iran and Israel were fighting, the ships were taking about 10 to 15 days time more. And now that has stopped, and now the normalcy has been restored. Also, a case in point is that Emerald always provides FOB shipments. We hand over the consignment at the port in Chennai, and then the customer nominates the ship and takes it. So the fluctuation in terms of freight rates or any other disruptions happening, normally we leave it to the customer, because I think he may have a higher volume. He can demand a better rate. And if there is delay, he knows how to handle it. Generally, we don't take CIF shipments. We always, and that was one reason during COVID, when the freight rates, post-COVID, the freight rates went sky high. Emerald was one company which never had an impact on its profitability or supply chain, purely because we thought our core focus is to make a product. Shipping and all those things should not affect our bottom line. So we always left it to the customer. We'll give a rate up to the port. From there, they should take it. So both Europe and Dubai, we don't face any problem. Even in US, I think ships are fairly going all right now, and there are no major disruptions in any place, unless otherwise any new geographical tension happens in future.
So thank you for illuminating me with reference to this supply chain management also, sir. And prior to me calling it quits, just thank all the team members and associates and the executives and the directors, and as well as the employees for putting up a good show.
Thank you, sir.
I wish and trust that you keep up this and achieve the goals as per the prospectus.
Sure.
In the process, the individual shareholders like us also are taken in, and we are also benefited. Thank you very much.
Thank you so much. Thank you. Thank you.
Thank you. Before we move forward to the next question, I request all the participants to limit their questions to 2 each. Next question is from Mr. Ankur Gulati. Ankur sir, you can go ahead and ask the question.
Hi, Chandrasekhar sir.
Sir.
Hi, Krishnan.
Hello, sir.
Hello.
How are you?
I'm good, sir. Hope you're good.
Fine, sir.
So just if you can give me revenue for solid tires, press-ons, and pneumatic separate H1 split. Do you have the split handy?
Sir, your voice is not clear.
Do you have the split of
The
pneumatic
revenues from
tires
the
and
solid tires,
segment wise? Yeah, pneumatic solid tires and press-ons for this first half.
Sir, if you take pneumatic and solid is 50-50. And within solid tire, you will have 10% press-on band, balance pneumatics, balance solid tires alone.
Okay. And anything from wheel rims?
So wheel rim actually comes as a composite product in the solid tires. Now, when you say press-on band, it's a totally different category of tires. In solid tires, always we'll have 10 to 12% of wheels going as an assembly to the customer. So I think if you again want further split up, you can say it's 10% press-on band, another 12% wheel rims, and the balance solid tires. As far as pneumatic is concerned, we do supply with assemblies also. That will again form about another 8 to 10%. So 40% will be tire alone, another 10% will be tire plus wheel.
Got it. And realizations have been flat, or is there an impact of rubber price movements at all?
Sir, I think as we told you, in fact, 6 months results show that it has been better. And in fact, over the last year, the consolidated results have been better. So we are able to fairly sustain the margins. And wherever there has been increases, we have been able to pass on. And wherever improvements could be done on the product by cost cutting, that has also augmented for the bottom line. So I think the trend seems to be fairly good as of today. And
raw material, if you're looking at raw material prices, it has been fairly steady.
Got it. Sir, one request, and I think we requested it last time as well, that in your result presentations, if you can add number of tires sold, it helps us track capacity utilization and realization.
Okay, sir.
I mean, we have data, I think, till March 25 or September 24.
Sir,
Right,
actually, number of tires sold, on a half-yearly basis, how much it has improved in each category you want to know. Am I right? Okay, sir.
Yes,
We'll provide it.
I go to prospectus, there was tonnage given.
Yeah, we will share it to you, sir, and we'll include it in our presentation also. It's a good idea. We'll do that.
Second, the mixing plant, I guess, will there be certain higher depreciation initially till the time you reach certain capacity utilization, and that can be a slight drag on your profit after tax? Is that fair for FY26?
No, sir. No, I think it's going. In fact, it's going to be a flat depreciation percentage only. Now this year, it's a 3 months for which the utilization is going to be 3 months. Next year we'll have a full year realization. Now I don't think there should be any differential depreciation year on year.
So this 60 crore capex which you have done, the depreciation on this will start showing up, right, in H2 or H1 of next year.
That's right. That's right. That's right. You are right. In the current year, majority of them will come for depreciation.
But
Next
your
quarter.
capacity, exactly. But your capacity utilization will gradually go up. So that means
That's
at
right.
least below
That's
EBITDA
right.
margin pressure.
See, 3 months, the next, see, November, December, January, February, 4 months, we will have the impact of this capex expansion. To be more precise, from January, February, March, the additional, that is why we have projected an improved sales. If you could see, last year standalone was 180. This year we have projected 229. If the 3 months and incremental volume only has pushed our estimation to 228, 229 crores. On a console level, we are looking at 240, 250 crores. This is purely because of this 3-month addition of the capacity only.
So, sir, this 45 CR of additional sales standalone this year, is this because of new capacity?
Absolutely. Some, I think a majority because of the 3 months impact on the improved capacity, as well as I think some capacity higher utilization in solid tire also, because anticipating this capex, people have started placing orders. So wherever the molds arrived, we started producing. So also there is an improvement on the current utilization in solid tires as well as pneumatics. That's the reason why you are able to see that increase.
See, operational efficiency has also been a reason for increase in the output.
Yeah, I mean, Chandrasekhar sir, just as a layman, what I'm trying to understand, let's assume this year you get 30 crores of revenue from new capacity or enhanced capacity, right? For 3-4 months. So if it's for
Yes.
3 months, then next year you get 120 crores.
Yes.
Your earlier capacity is 180. So FY27 alone should be 300 crores plus minus.
I think you are right. You're right. That's
You are
what
right,
current
but-
year 26. That's what we have projected also. If you could see.
No, we are conservative in terms of telling you that we will do 250 crores and then, but,
Market
achieving it
headwinds are
is,
very.
you have
No,
to,
we are working towards that.
Yeah, a bit fair enough.
we are working towards, achieving targets, taking numbers conservatively and achieving them rather than, giving huge stories and then, running behind numbers. We are confident of what we are declaring, and we will, be there. If it happens, we are able to achieve 300 in the next year, 27. So be it. We will do that.
Yeah. No, thanks, sir. Just to finish my thought process, let's assume standalone is 300, another 20-25 comes from the 2 subsidiaries, right? So theoretically, FY27 alone should be 320 crores if this linear equation holds.
No. I think, to be very clear to you, as far as the wholly owned subsidiaries are concerned, they are not meant for improving profitability at their end. They are made for improving profitability at the India level. Okay. So basically what we need to understand is from 180, we are going to 220. From 220, we will go to another 280 because that is how, because orders, the new brand and all those things have to kick into the market and things should happen. It should start contributing more and more to the market. And again, the US is another Damocles sword which is standing. We are working on other markets. So to be very conservative, a console level of 300 to 310 crores will be a fairly reasonable estimation of the next year's overall performance.
That's fair. And Krishna Rama sir, at least in last 1 or 2 calls, I've been probing you if you can give us more granular details on how the whole margin expansion plan is. So if you guys believe this is the right time, what is your internal strategy to expand the margins, right? Especially now that the mixing plant is up and running.
Okay. But we did explain, no, sir. We did explain that the mixing plant will, once it is internalized, the transportation cost, the logistics cost, the supervisory cost will all accrue to this, and that's how we are projecting a better improved performance in the next year and the years to come. So you want what sort of a detail you want, sir?
Sir, if you can quantify this, because as far as my understanding from plant visit, the
Hmm.
older mixing plant was also there. It's just that the technology was old, right?
Correct.
Yes.
You're right.
Yes.
So when you're saying logistic cost and everything else, if you can quantify in terms of either EBITDA margins or absolute, is it 100 basis point improvement in next 12 months, or is it more than that? What is it?
We will work out and let you know, sir. I
Yeah.
think it's a question you asked last time also. We'll do it. We'll send it to you.
And the last thing, I guess this was last con call or the interim calls. There were some discussions happening for more Indian airport related products and some sort of I don't know if it was a joint venture or a technical tie-up. So any progress on those discussions where
I
you were
think,
talking about OEMs for Indian markets?
I think we have become a major supplier to TLD, which is the world's #1 GSC company, and I think we are giving them complete end-to-end solutions. And I think I do not know what tie-up you are referring to. Can you be more specific?
Yeah, there was some discussion, right, that you want to supply tires to some of these MNCs for their India business, or I don't something of that sort.
Yeah.
You
TLD is the
Okay,
company.
JCB. I think we are told a few global entities. Chandruji, he was talking about JCB and other entities, and also a company called Sani, for which we were working
Yeah,
on
correct.
development
Yeah.
of products for them. I think
Hmm.
post US impact, the results are yet to kick in, because they
Hmm.
too are eagerly looking forward to some change of tariffs, because it's a
Hmm.
huge volume, and the factory in India has
Hmm.
completed the testing, and they are very happy with the product, waiting for signals from their US bosses to start manufacturing. In fact, the trial production has been done. We sent samples both to India and China, and both the places they are happy. The trial run is still going on while they are waiting for some good news from US. So I think these are new projects which are purely they are depending upon the US market to improve. So that's why even their own production has come down. They are waiting for good news from US. But I think as an organization, we work on about 10 to 15 projects like this in various markets, not just US alone. We are working on a project in Brazil. We are working for a project in Italy in a very major way. There are about 7 OEMs we are talking to them to create a regional stocking point and supply to them. We are also working on a few things in the African market to expand, to create one more logistics center to reduce the cost of freight as well as to reduce the tariff. There are a lot of projects in pipeline we are working on. We will let you know at the appropriate time.
Okay. Sir, again, going back to the previous call notes, there was some discussion that the pricing on new product, and I think you mentioned this, the new product which you have launched is 10% higher on per MT
You're right.
basis.
You're right.
Hypothesis.
You're right.
Uh,
You're right.
So does that mean your EBITDA margin on the other 120, 130 crore revenue which will come will be 6-7% higher?
Sir, I think, whenever there is an increase in the cost, there will also be a cost increase also. But what will
Raw
happen
material
is,
cost.
yeah, raw material cost. But overall, if you see, if the volume of these tires, super premium tires start going up, they will add marginally to the profitability also. It's not always direct. You have 7%, immediately it will go on. On a total volume, this will be 20%. The increase in margin will add to the overall margin. It may not be proportionate, but it could be a percentage of the overall profitability. That's how even now, if you see, the current year itself, our EBITDA margins have almost jumped 1.25%. And even the PAT is improved. See, point is, I think the more and more you start improving your super premium and higher end sales, the profits will start increasing. This is the simple logic. And I think the focus is also towards that. So I think the effort is to go to an area where the competition is less and the competence required is more. So this is what we constantly work, because on the run of the mill product market already fixes the price. When it comes to exceptional performance only, they are willing to consider the extra margin. And that's precisely the area the company is also working.
Got it, sir. And last question. You referred to some discussion for mining tires last time around. So any movement on that front?
Sir, your voice is
discussion?
breaking. Your voice is breaking.
Yeah.
You
Sir, your
referred to
voice
some.
is breaking.
You refer to some discussion for mining tire production. Mining
That's
equipment
right.
tires.
That's right. I think that's a project in pipeline. We are working on that. There are a lot of composite things which are required for that. It's in the drawing board, and you will hear it from us soon.
Fair enough. All right. All the best, sir. Always a pleasure.
Thank you, sir. Thanks a lot, sir.
Thank you.
Thank you.
Next question is from Mr. Raj. I would like to request the investors to limit their questions to 2 each. Thank you. Mr. Raj, you can go ahead and ask the question.
Hello, am I audible?
Yes.
Yes,
Yes,
sir.
sir. You are very much audible.
Yeah. So, sir, you said the peak sales of the company will be achieved in FY27 of around 350 crores, right? So, how about FY28? Like, how do you see growth coming in FY28? Like,
see, as far as we told in this project, as far as this project is concerned, the capacity, the maximum sales that we can achieve is about 350 crores. I think whether it will happen in 2027 or the second half of 2028 is for anybody to see, given the global headwinds. But one thing we should remember is, or not all the improvements will happen overnight, because there is a time period required to escalate the volume. We are fairly confident we will touch 300 crores by 2027, and thereafter, I think if the market trends, if America also comes with a positive note in terms of tariff, things could be better. Things could be better. But as it is, we are looking at implement the full capacity to be available for the next financial year, wherein we are counting on certain markets for improvement and also US market to improvement. So overall, based on the market trend, we are confident of touching 300 crores. But of course, if the market performs better, we can even go to 350 crores.
what I am trying to understand is, to achieve a sale of beyond 350 crores, the company would need to incur a further capex, right?
That's right.
Yes.
That's right.
All right. So that should be in FY28 or so.
Yeah, that's right. By 2027 middle or towards the second half, we are working. We have already started working on that. What should be the improvement we should do post 2027? We will inform you at the right time. There are a lot of areas where we are looking at expansion. We will let you know.
Understood. And sir, what will be our expansion plans for South Africa?
See, I think right today, that we don't have any such plan. As such, we are looking at studying the market, what we could do and how we could do improvement on that market. We will come back to you with the response at the right time.
See, South Africa does not have an OE manufacturing unit there. So we are only looking at the African market generally has replacement market. They have importers who can buy large volumes of tires from us. But as such, there's no manufacturing plant in South Africa which would want tires. But having said that, what happens in Europe or in the US is what the South African market also needs. You have to understand that we are in a product where in a country where there's less of manpower, more of logistics happening, is a country where our tires are needed. So it is an equally evolved market. If you look at Africa, because of the lower population, it is an equally evolved market like in Europe or in the US. So in terms of quality of products, in terms of applications, demand of applications, this is a market which is quite matured. So we're looking at supplying these supply chains and not OEMs over there. So that's where the African market, we look at it more like a European market or a US market, and not simply like an Indian company. Am I audible? Hello?
Yes,
You're
yes,
audible.
Yes,
You're
sir.
audible.
Yeah.
understood.
Sorry.
And sir, post the
Okay.
capex, yeah. And sir, post the capex, you said that our EBITDA will improve. So sir, how much room do we have for EBITDA improvement? I think in H126 we closed at around 17% EBITDA, right? So
No.
how much
No.
incremental EBITDA we can get, like,
See,
in
already
full
we
year
have
FY27?
already we have achieved an incremental EBITDA of 1.25% the first half. Okay. So when with the increase in implementation of the project, other costs also come, R&D costs come, new talents are being recruited for that. It's not going to be straight jacket, you improve, then it's going to come. It's going to come with a composite cost also. So overall, I think even the first half, our EBITDA has touched already 17.75%. At a consolidated level. So the same trend will continue for the rest of the year also.
Understood. And sir, I just skipped a point on Africa. So beyond 350 crores of sales, is there a chance we do an expansion in Africa?
I think why are you so particular about expansion in Africa, sir?
No, I just heard on the earlier calls. That's why I'm asking. Yeah.
Okay. See, basically, the African market is a mining market. It's a blue ocean. Today, Europe, US, and all are already developed. The major mining happens in the African market. So, one of the targets that of Emerald is to work in unexplored area. That's why we were suggesting to you that we could have some opportunities in Africa. And I think there is a lot of work going on into that. We will come back to you at the appropriate time, sir.
All right, sir. Okay. Thanks. All the best.
Thank you, sir. Thanks a lot.
Thank you.
Thank you.
Thank you. Next question is from Mr. Himanshu Basani. Himanshu, sir, you can go ahead and ask the question.
Hello, sir. Mr. Himanshu? Hello? You are on mute, sir.
Himanshu, sir, you can unmute yourself and ask the question. Okay, we'll move forward to the next question. Mr. Madhur, if you have more questions, you can continue.
Sir, so I wanted to understand, post this capex and post reaching 350 crore in our existing plant, is there enough capacity for further brownfield expansion, or will we have to go for greenfield plant?
No, sir. We have to go for a greenfield.
We'll have to go for a greenfield expansion.
Okay, sir. And sir, what's the business of both our subsidiaries?
Europe and Middle East are subsidiaries. Yes.
Okay. So do we have to give costing disclosure to our customers, especially the OEM customers? Do we have to give our costing to them?
Yes, sir. I think they know normally we don't give costing, but there we price ourselves based on the cost of the raw materials. We follow what is called the SIAM index. Society of Indian Automobile Association releases a price for all the rubber components for making a tire every month on the 15th of every month. So when there is a price increase happening on the raw material, we always peg it to the SIAM index. Otherwise, we are under no compulsion to release our costing profitability to any OEMs. No, not at all. But for getting a price increase, we need to peg it to something where everybody will agree. I cannot say that this is like this and he will not agree. So we peg it to SIAM index.
Sir, are we the single source supplier to any OEM customer?
Sir, no OEM has one single supplier at any point of time. Normally, we will be one of the major share. Major share we'll have in the OEM. We also don't want to be an exclusive full supplier to OEM because pricing is always under pressure with the OEM. We would like to have a judicious mix of both after sales and OEM. The OEM gives you visibility. When the forklift rolls out or the equipment rolls out, it comes with your tires. That gives a popularity. Excuse me.
Yeah. I guess Mr. Himanshu was able to unmute himself, but you finish your answer
Yes, sir.
and
Sir,
then we
very
can.
quickly, sir. Very quickly, sir. Both are subsidiaries. Was the business of the subsidiaries only marketing?
Only marketing, sir.
Only
Only
marketing.
marketing.
So
Marketing
great.
and support service to our partners
To the
in various
customers.
countries. Yeah.
Sir, now
Eh,
I was just broadly comparing our parameters with BKT Balkrishna Tires. Sir, so our inventory days is 120 days, theirs is 60 days, our debtor days is 83 days, theirs is 45 days, our employee cost is 13% of top line, theirs is 5%. So basically I'm trying to understand that I mean I understand they are further backward integrated than us, sir, but where do we exactly score? They have economies of scale, they are more established than us. So what is our USP?
So
Sir,
basically, the product line itself is different. They are catering more to the agricultural market. We talk about off-highway tires, but their area of interest, their presence is quite different from where we are. So that's one of the major areas, and the rest of things, Mr. Krishnam, you can explain.
Yeah. See, I think they're well said. The most important thing is, as far as the solid tire industry and the penetration in the market and better understanding of the market, Emerald is far well entrenched than BKT. BKT has its strength in tires where Emerald has already we have not forayed into many of the areas where they are doing. Each company chooses one area as their area of specialization. And the Emerald has chosen industrial tire as the specialization. And we are slowly getting into construction, agriculture, and all. Whereas BKT just entered into industrial tires. And I think it will take, by the time they get into it, the type of composite advantages. Small is beautiful. Emerald is able to handle customers the way they want. Whereas BKT is very inflexible. And therefore, I think both have two different methods of comparison. And the Emerald as a company is more into application engineering tires. We make 28 formulations depending upon the application of the tire. And this has been over a period of 23 years. And even before that, the team has almost 100 years of experience in industrial tire background.
See, you're talking about stock also. The stock holding is higher because of the fact that every industrial application is different from another. We've always been insisting that what works for us in Russia or in Europe is not the same product which will work in the Middle East. So these are some areas where there are inherent disadvantages of being in the industrial tire market, but that is also the advantage. That you can look at it both ways. If it's a we modeled ourselves in a way. If you look at my real competition, the solid deals and the Trelleborgs of the world, who are specifically focused into industrial tires, they will also have a large stocking because it is application oriented. So that's something which you will have to understand, that in this business you will have to stock and sell.
Sir, and what would be the approximate replacement cost of our infrastructure now? If someone hypothetically is going to recreate our whole infrastructure today, then what would be the approximate cost of that?
See, first of all, you are talking about creating the infrastructure. You can create an infrastructure. Where will you sell? How will you understand the product complexities? How will you understand what customer requires? How much time will it take to develop the market confidence on the product? So if machines are only required to produce something and scale up, then everybody will be in this business. The reason is not the infrastructure, is just an aid to create a product that will ultimately satisfy the customer and also make him happy with the product. So I think merely replicating the engineering part of it or the construction part of it is not the critical matter as far as tire manufacturing is concerned.
Our subsidiaries also, because we want to have our ears on the ground. We got to understand. In our initial days, our dealers who used to import tires from us directly, they would not put our product into a tough application. They will say tough application we will buy from competition. If it's a standard application, we will buy from Emerald. They were not willing to experiment or they were not willing to look at our capabilities. Now that we have an office, now that we have our sales manager sitting over there, we are talking to people directly. We understand where the application is, what is needed. So we are able to deliver products. So like Mr. Krishna was telling, it is just not about creating an infrastructure. Everyone can create an infrastructure. Everyone thinks that the way Emerald started small and has grown up, we can grow up. But it's a combination of the right kind of manufacturing facility, the right kind of sales team. Even compounding plays a very important role. Horses for courses. So you have the right of compound to deliver a product. We are talking to some aluminum and steel companies in the Middle East, where getting an entry for an appointment itself is difficult. There we have come to the extent of giving them products for trial. So it just doesn't happen. They are working with molten metals, and it is a risky proposition for them to change an existing supplier. So you got to be confident of giving a product which does not fail. So that is when the customer will come to you.
Now, sir, lastly, sir, we made a sales to some related party, SA Rubber Engineering Private Limited of around 2 crores cumulatively in FY25 and FY24 combined. And the receivable from this entity is 8 crores. So I don't understand that how come for sales of 1.33 crore in FY25 and 73 lakhs in FY24, our receivable is 8 crores. So it doesn't add up basically.
See, basically, I think this SA Rubber has been run by one of our partner for the last about 6 years. During COVID, the partner died. Okay, so there were huge stock left in South Africa, as well as money to be collected from customers. Now we need to create a chain of events to make the supplies come and the delivery to happen. Today, I think in the South African market, we are becoming a major dominant player because we are supplying to all the mining companies and other places. Some of this, it's not fully outstanding. It's also in the form of stock and the receivables. And some of these entities, we have given a long credit because that's a trend in that market in mining companies. And almost, I think in the last 6 months, we have almost recovered about 3-5 crores from them. And in the coming 2 months, I think there is a major bid we have done across Africa to sell these tires. And that's why we were telling the African market is a blue ocean. And there has been a huge spurt in sales from the stock that they were holding to the markets in South Africa. So the continuous flow of tires have to happen because newer and new applications starts coming. This process is going on, and we are very confident this market is going to be a game changer for Emerald tires. We are stocking at 7-8 locations across Africa to supply to customers, which are high potential markets. And I think the market trend is so good that we are looking at further more expansion in the African market. Of course, the receivables are almost coming in. And they have already 3.5-4 crores are coming. The balance is almost in. There is no delay at all. But moving forward, that's going to be a market we will stock and sell a lot because the competition is also not much. The challenges of the product we have understood. In a mining application, the tire has to be extremely good. We have got some special formulations for the mining market, which we are expanding very much. So it's going to be a future driver of business.
Sir, now our receivables outstanding for over 6 months overall were 19 crores last year. Now, out of this, 4 crore was outstanding more than 3 years, around 5 crores was for more than 2 years, and around 4 crore more than 1 year. Sir, so I mean, I hope we are able to get that money back because money that is outstanding for 3 years, then, sir, I mean, what is the possibility of getting it back?
Sir, if you take, for example, which are the markets you are selling more? It is only South Africa. All other markets, we are within 180 days. There is no change at all. Because of that partner who was we were having 40% market share in that market. So we had to understand, because once he died without succession, we have done a lot of improvements there. We have sent a team there, And that market is going to be a future trend. Now, if you see by the end of 2026 March, that outstanding will almost be nil. So much money has been, so much of efforts have been taken to develop that market and stocking at different points of time. These are not outstanding unreceivable. These are tires physically available in these places for marketing to the customers.
Great, sir. Sir, thank you very much for answering all the questions, and sir, very encouraging, and best of luck to you, sir.
Thank you, sir.
Thank you.
Thanks a lot,
Thank
sir.
you.
Thank you very much.
Sir, I think we have covered all the questions.
Thank you, sir. Thank you much.
We can conclude the call. I would like to
Thank
thank the management for providing valuable insights and guidance, and thank you to all the participants for joining the call of Emerald Tyre Manufacturers Limited. We truly appreciate your time and contribution. For any further queries or clarifications, please feel free to reach out to us at info@acmeladvisors.com. Thank you, Chandrasekharan sir.
Thank you,
Thank
madam.
you,
Thank
sir.
you.
Thank you.
Thank you. Thank you so much.